Hey guys, Chelsea William here with Core Solutions Group. So we do tax accounting and cash management strategies for law firms all over the US. But in this video series, we bring other business experts that you should be consulting in your law firm because accounting is not everything. There are a lot of other moving pieces that really need to come together in order for anybody to have a successful business. Today, we have with us Dave Runge of Tax Law Solutions. So David has a really interesting story. He's been president of 5 companies, ranging from startups to divisions of Fortune 500 companies, and was also a partner at one of the largest professional services firms in the world, Deloitte Consulting. He's got over 30 years of professional experience in various technology companies and in management consulting firms, both private and publicly held. Tax law solutions. So most companies are born from an opportunity to solve a problem. I was having a discussion with someone yesterday, and I have kids, right? So I referenced a lot of like Disney and Pixar movies. And robots, one of the characters in the robots, his motto is see a need, fill a need. And that's exactly what Tax Law Solutions did. In 1998, Dave was sitting in his corner office frustrated with his ridiculously high tax liability. So a lot of people can relate to that. For years, he'd been looking for an expert who could help him reduce his income taxes. And during his search, he met with many tax advisors and CPAs who gave him all the same typical advice and recommendations, but no one who offered new strategies that could substantially change his tax situation. Now, he knew other business owners with similar or more income than him were paying significantly less taxes. I mean, we hear about it on the news all the time, these giant corporations paying no taxes. Like, how do they do that? So Dave went on this adventure and developed Tax Law Solutions to do exactly that for the people that didn't have access to this information. So Dave, I want to tell you, I appreciate you taking the time to come and join us today and share this super important information with our audience.
It's my pleasure, Chelsea.
Yes. All right. So we're going to touch on a couple topics today, a few topics. Dave is going to help us understand exactly what tax strategy means and what it looks like, and tell a little bit more about Tax Law Solutions. More importantly, we're going to cover a section in the CARES Act that is not currently being talked about very much. With all this free money flying around, there's a piece that you definitely don't want to miss. So Dave is going to share that information with us. So Dave, I'm going to let you take it over and help us understand what tax planning and tax strategy is, and tell us a little bit more about Tax Law Solutions.
Sure, happy to do that. Part of tax planning means having the right perspective. In fact, that's everything. I often say I can't change our clients' taxes until I change how they think about taxes. So let's start with how we need to think about tax planning. And I'll use some analogies. I find that analogies help explain concepts in a familiar way. A football analogy. A CPA brings plays to the game. A tax attorney brings a game plan to the game. I'm just going to differentiate 2 respected professions, accounting and law. So a game plan is required for the University of Clemson to beat Alabama. That's a tough match. Both teams bring the same rules to the game. Both teams have the same plays they can call. All taxpayers have the same rule book. It's called the Internal Revenue Code. What matters is how you organize the game plan to win a football game or to win a game of tax planning. So I hope that analogy is coming across in how we approach tax planning. We look at it as a game plan, not as a deduction, not as a play. So the first thing we've got to get through is that there are more resources needed than a tax accountant. The tax accountant typically doesn't have the opportunity to do a forward look. They typically have the opportunity to do a backward look because they don't see their clients until the year's already over. So there's no opportunity to plan for last year, this year. We do a forward look. Tax planning occurs at the beginning of the year, not the end of the year. That's a principle that one needs to keep in mind. Tax planning is a game plan. It's a plan, not a deduction, not an event, not a line on a tax return. So if we can get through those two myths, we're going a long ways toward understanding how tax planning occurs. And there's much more to tell to the story, of course.
It's I like how you put that. So I have my what I call my top 10 money myths, and it's the lies that we tell ourselves around money. And myth number 10 says that paying taxes and profits are a bad thing. And I talk about how so many people come to us and their only goal is to pay no taxes in the current year, regardless of what their plan is for the next 3 to 5 years. They are focused right here on this single year. And, part of what we do and preach is that you can learn a lot from the past, your past numbers, your past tax situation, your past financial situation. But until we get to the point to where we can uncover the story of your projections for the future and what it could be, then we're not really optimizing and being in business on purpose and with a purpose.
That's well said. There's no event here to tax planning. There's no event to business planning. There's a game plan to execute, and the plan unfolds in front of you. No strategy survives its first encounter with the enemy. That's Sun Tzu Art of War, I suppose, or something like that. It's same way with a football game plan, same way with the tax plan. It's a constantly evolving set of circumstances that you have to adapt to.
Yes, and which is a bigger story than the current year and the current potential tax bill.
Yes, it is. Yes, it is. It's a bigger story than what deduction am I going to take on December 31st to minimize my taxes this year.
Yes, absolutely. So I kind of went into a little bit about how tax law solutions came to be. Share a little bit more with us about, what it is that you guys offer and who exactly you guys help and how.
We target business owners, small to medium-sized business owners. It's an underserved segment of the market. When I was in a Fortune 100 company, we were surrounded with great tax planners, very experienced, very amazing lawyers, accountants, auditors. Most small to medium-sized business owners don't have access to those types of resources. They don't know where to find them. They're trapped in a set of myths about tax planning like, Chelsea, we're doing everything we can to reduce our taxes. And that's where they begin and end their tax planning. Reliance on one person, one set of skills. That never happens in a big company. So we bring to small to medium-sized enterprises a set of knowledge, a set of resources that explains why large companies don't often pay a lot in taxes, often don't pay anything in taxes despite profitability. It's because they're executing a plan very well, and because there is knowledge out there that does not say you need to be a Fortune 100 company to use this knowledge. The knowledge out there is, are you configured properly? Do you know how to take advantage of this provision or these set of laws? That's what we bring to small to medium-sized business owners. Now, let me quantify that. That's 1 to 100 million in revenue. It's an underserved market. They may have outgrown the need for just a tax accountant and don't know it. They don't know what a tax attorney does. They don't know that there's a whole nother set of skills available. So that's an interesting niche market for us because we bring information that they don't even know they don't have.
Yes, and I can't agree more. I'm a firm believer that you should work in your strengths. And so the way that we do tax services, but the way that we do it is instead of having one tax professional that we work with, we have a network. And we make sure that we use someone who is going to be the best fit for the client's tax situation. And, we're actually working on building a relationship with you and your business now. I think that's so important because it takes more than one person and you're really limiting yourself when you have one person's perspective. And so we kind of believe the same thing, consulting the multitude and finding those key people who really get it so that we can see the difference.
Well said. It's a set of complementary skills that's needed. Our skill set, our employees, they bring a tax law dimension in addition to tax accounting dimension. Law school requires 3 unique years of education. It requires a different professional license, a different set of professional skills. Tax lawyers should have different skills than tax accountants. Those skills are what make all the difference, especially in the small to medium-sized business realm, where that's entirely newfound knowledge, entirely newfound tax solutions.
Yes. And I love your guys' slogan. Can you share with us that little quote that's at the bottom of all of your guys' email that I just
Uh,
love?
it's a great metaphor. There's two tax systems in this country, one for the uninformed and one for the informed. And I can't take credit for that myself. I'll give credit where credit's due. It was a well-known, very famous judge who was ruling on tax-related matters, and he's the one that pointed this out. It tells the entire story.
I think it's so awesome that you guys are bringing this information and informing those who aren't privy to the relationships that have this information for them. And I think you're right. I think and that just speaks to your guys's mission of the see a need, fill a need. I mean, you saw something in an area that was being underserviced and you're filling that gap. And I can really appreciate that.
Well, small to medium-sized enterprises are the backbone of the U.S. economy. Okay, there's a statement that we can all agree with, and they pay 30 to 40% more in taxes than is necessary. That's the savings that's available initially with good tax planning. That's money they're entitled to keep. That's money they've earned, but don't know how to keep until they find the right set of advisors.
Set. Yes, absolutely. So share with us a little bit about the actual tax planning strategies and some examples of some of your game plans that tend to work for this market.
Three sets of solutions we bring to bear. So we describe a plan, and after we've been hired to build the plan, we put the plays in place. So I'm going to describe three approaches to tax planning. One is business restructuring. This is where it often starts. And there are reasons, for example, that there are different types of legal structures. I'm not going to get too technical on this. I don't need to. I can get these points across speaking to business people. Most businesses are organized in the form of a waterfall. The more I make, the more I pay taxes on. The less I make, the less I pay taxes on. So it's a game of deductions. That's all it is. Because businesses are mostly organized in the small to medium-sized realm as something called a pass-through entity. That means there's a direct relationship between the profits of the business and what I pay tax on. We have to break that. We have to break that. Until we give a person control over how much income arrives on their 1040, they do not have control over their taxes. So that's the essence, that's the beginning of planning. That's a business restructuring set of solutions. And here's how it manifests. There's 20 ways to take money out of a business tax-free. The average number of tax-free fringe benefits used by our clients when we first meet them, rounded to the nearest whole number, is 0. They're missing 20 opportunities.
Wow.
That takes business restructuring to solve.
Awesome. Okay. And now I know that you guys also have, so you talk about retirement a lot. And one of my other money myths is that it's never too soon to start planning for retirement. And, business owners have this vessel that they can use to kind of get the benefits of retirement planning while doing it in a more tax advantageous way. Can you speak on that a little bit?
Absolutely. Second set of solutions is right in that area, Chelsea, retirement strategies. Now, when I use the word retirement strategies, I'm simply going to refer to something we call the gap. Let's say a person makes $250,000. I'm just picking numbers. Let's say they need and spend $100,000 on their lifestyle. There's a gap there, $150,000 of money they're currently paying tax on that they don't need for their lifestyle. That is money that can be set aside, should be set aside for their future use. I'll call that, quote, retirement, unquote, money. That doesn't mean it's locked up. It means they don't need it now for their lifestyle. There's the opportunity. Myths abound around retirement strategies. Myths like, let's put money aside now so we can pay tax later when we're in a lower bracket. Who wants to be in a lower tax bracket when they're retired? That means their lifestyle changed. Myth number 32. Myth number 17. Deferring tax is the right solution here. So let's do whatever we can not to pay tax now so we can pay it later. Myth number 42. I mean, this just goes on and on.
Yeah.
It goes, let's set aside $13,000 a year to fund our retirement. I don't think that's going to fund your or my retirement. So we have underperforming misunderstood strategies in place to fund our, quote, retirement. For decades, large companies have known how to set aside hundreds of thousands of dollars every year for key executives for their retirement. And here's the revolutionary part. It's deductible now, the money grows tax-free, and it can be withdrawn tax-free. That's the trifecta. That's the missing element in retirement planning. Real money that can really be set aside really tax efficiently.
Oh my goodness. And that right there just speaks to the two tax systems for the uninformed and the informed.
Completely. Most people fund their retirement with after-tax money. That's a very inefficient way to do it. The informed participants fund their retirement as they should with pre-tax money because the law allows it.
Yes. Okay. So we've got restructuring, retirement strategies. What's the third tax strategy?
We call it profit relocation. I'll use an analogy to begin with that many business owners understand. Many of America's largest companies are headquartered in Delaware, or their registered office is Delaware. I've been to Delaware. There's not much in Delaware. There's no tall skyscrapers. There's no big manufacturing facilities, company headquarters yet. What's the deal with Delaware? There's something about the law that promotes or facilitates the registered office of big corporations being Delaware. This has nothing to do with taxes, but it raises the point that where you earn your profits or where you locate your business and earn your profits has everything to do with your taxation. Now, I'm not suggesting that anyone move their business, move their employees, move their manufacturing facilities. I'm suggesting that they move their profits. Profits are portable if this is handled correctly. Here's the clue. By latest count, there's 176 economic development zones in the US. The US is the best place to earn your money and keep your money. The US is a great, I'll call it tax haven, if you're in the informed system. What if your profits were shifted so they were earned in a very tax advantageous place because you organized your business appropriately? That, in essence, is the Fortune 100 class strategy. Fortune 100 companies pay the amount of tax that is due. You can't avoid taxes. You simply pay the amount of tax that is due. So why is it the Fortune 100 companies onshore in the US earn money in the US and minimize their taxes in the US? It's because they earn their profits in the most advantageous place.
And I'm laughing because I know the Delaware situation, so I get it.
Yeah, yeah.
I
It
mean,
raises a question, doesn't it? It causes you to ask the question, what do they know that I don't know? It opens minds. And as I said at the beginning, Chelsea, of our very interesting conversation here, until I change how people think about taxes, I can't change their taxes.
You're absolutely right. You know, and we have a lot of parallels. So anytime I give a presentation about money and cash management, I always start my presentations with mindset and habits. Because in order to change in order to get, there's a saying, what got you here won't get you there. And the truth is, a lot of people are stuck because of the blocks that are in their own mind. And not just with tax and money, right? Other places too. This is just where we relate and we focus on. And so, I think it's so important. And then of course, habits support those beliefs, those new mindsets that you're trying to change. So I can really appreciate that you're really getting to the root of the problem, which is the view on taxes and the legal side, doing it legally. Because some of these strategies, people can be like, oh, are you going to get me in trouble? I'm sure you guys have heard that, like, is this? And yes, it is perfectly legal. It's a matter of the uninformed and the informed.
We come back to that metaphor, don't we?
Yeah.
Some people use politically charged words like loopholes. I've looked for that word in the Internal Revenue Code. I can't find it. When I look in the Internal Revenue Code, I find laws. I find laws that simply can be applied, and when applied, they result in changes in a tax position. That's the word I find. I don't find the word, I don't find gray in the tax code either. When I open the Internal Revenue Code, I see black letters on white pages. There is no such thing as gray, and everybody knows there's no such thing as gray. Is this a business meal or not? There's nothing gray about that. Is this business travel or not? So we toss around words that are meaningless and that constrain people into narrow paths of thinking. If it's the law, it's available. Do you want to use the law or not? That's the only consideration people need to have.
Yes, and it's just that straightforward. Yes. Okay, so I want to get to what I am personally excited about for this conversation. I want to talk about what you guys know that I have not heard anybody else talking about, that the CARES Act has included for tax situations.
Oh, it's amazing how focus can be diverted away from the important points in the media. That was not meant to be a political statement. It was meant to be an observation about the CARES Act. What we hear about, what small to medium-sized business owners are hearing about, is that they can get a loan from the SBA that can be forgiven, or a portion of which can be forgiven if it's used in certain ways. That's a very good thing, and it's very important. The bigger numbers, however, are in the tax-related aspects of the CARES Act. Here's a soundbite. The average tax refund we project we will obtain for clients in using a particular strategy that's come from the CARES Act is $309,000. That's bigger than the loans these clients are getting from the SBA. And that's a refund. That's a refund of taxes paid in prior years that they are now entitled to get back because of an underutilized but very visible provision of the CARES Act. It's right there. All you have to do is read it. It's called a net operating loss carryback, a return of an old law that is available for 2020 and only 2020, and then it sunsets.
So how does this work? And for those that are watching that are wondering if this is a good move for them, how can they know? Who is the ideal person that can take advantage of this piece of the CARES Act?
It's a very good question. And the moment of hesitation you saw is because this involves a plan. It involves a plan whereby we configure a business so that this year is what it is, not a great year. Let me explain. Businesses are already suffering, their profits are down, and there are steps they can take this year that are fully within the tax code to suppress their profits further. There are all kinds of strategies like that. I'll just mention one conceptually. Depreciation. That's a non-economic loss that suppresses taxes because things depreciate. What if this year steps are taken to take as much depreciation as possible? That creates a larger tax loss. What if business restructuring is used to enable the withdrawal of funds on a tax-free basis that are expenses to a business? That actually has the effect of increasing the operating loss of a business this year. Now, notice what I'm doing here. I'm using laws and noting the effect of the application of those laws is to increase the loss of a business this year that is already struggling. When I increase the loss of a business this year, that business can go back and recover taxes paid in prior years. It can carry back the loss. So put simply, the CARES Act suggests the creation or use of the maximum possible loss this year to get back taxes paid in prior years. Have to word that carefully because you have to follow the rules. We're not making anything up. We're applying tax law artfully and at a time when it has the highest possible benefit and effect for the business owner.
Okay, so I'm going to give that back to you. So for businesses who are already suffering financially this year, in order to take this piece of the CARES Act and make the most of it, we're strategically planning to continue what's already happening, right? Businesses are losing out. And what this carryback allows businesses to do is go back, is it up to 5 years?
5 years. Go back to 2015.
So to go back to 2015, and there's a particular piece of the Tax Act that has been modified, right? The Tax Cuts and Jobs Act.
Yes, which previously eliminated loss carrybacks. For 2020, a loss in 2020 can be carried back. It's a bonanza. It's much needed. It's smart. It's a good way to stimulate businesses, and it will work if people know about it and take advantage of it.
Okay, so let me ask you this. What about those who may fortunately have not been impacted as much as other businesses? And let's say that they file their, so this action step comes with the filing of their 2020 tax return. Is that right?
Yes, because that's when the loss or the profit is officially cast in stone.
But so if somebody has a profit at the end of 2020, this may not be a worthwhile strategy for them.
That's correct. Other provisions of the CARES Act will be, but the net operating loss carried back, which is one of several provisions, the one we're talking about now, will not benefit a company that's profitable. It's designed to help a company that is struggling right now. And the way that type of company can help themselves is to invest now, to make the right decisions, to make sure they, I'll use a colloquialism here that I have to be careful to make sure this isn't misleading, realize the maximum loss possible. That's how the law works. The greater the loss, the greater the benefit. Another one of the ironies in the tax code, but it's called the law. It's not a loophole, it's the law. So why not use it? If there are ways a business owner can maximize their loss this year by correctly incurring expenses, by investing in their future, by being smart about how they bring their business through this traumatic time, if that results in a loss, we have clients, average so far, $309,000 of tax refunds coming back from prior years. Pure bonus.
And that makes a difference.
Yeah.
All right, so let me ask you this. So for businesses that may not get to that place, again, fortunately, where they show a loss at the end of 2020, what other pieces of the CARES Act might they be able to look to, get all the benefit of what this act offers businesses?
We've learned that businesses can get about $50,000 of tax-free income from tax-free fringe benefit number 21. I mentioned that we counted 20 tax-free fringe benefits in normal times. A 21st one emerged, or we were reminded of, in the CARES Act. In 2001, almost 20 years ago, after 9/11, a law was passed that allowed extraordinary deductions to be deductible. Living expenses, for example. These certain living expenses now become deductible that weren't because we are in unusual times. The president stepped up to the podium on March 13th and said, this is a disaster. He invoked this law, which hasn't been used for 19 years in the way that it can now be used. So Chelsea, you or any other business owner can get about $50,000 of income tax-free from your business. That makes a difference. That doesn't make a difference for a Fortune 100 company. We're not talking about Fortune 100 companies. We're talking about businesses that need to get through this, that are struggling. So how does that happen? What's an extraordinary living expense now? The definitions are not entirely clear because how can you define this for each business? But let me give you the buckets. The buckets are medical expenses. The buckets are office expenses. Let's drill down on that one. You and I are talking to each other, not from a normal office, but from our office at home. I did not have an office at home before this began. I now have to have an office at home. There are a variety of ways now to write off a significant amount of expenses from our office that didn't exist before this disaster existed. I'm not talking about the complex ways where you get into depreciation, all kinds of other things in offices and home. I'm talking about the expenses related to office in the home. They add up. Here's another interesting clue. We're sitting in I see a doorway behind you. Maybe that goes to the health club in your home, the exercise room that you need to use now because your health clubs are closed. What if you need and want and desire to have those types of facilities in your home because you can't go out and use them now? That pushes a set of expenses into expenses that are arguably deductible because they are being incurred only because of the times. Childcare. They're not kids running around in the background of either of our homes, but if there were, are we likely to incur expenses for that? We have to work at home. Our children are not in school. They have to be looked after. Another set of extraordinary expenses. I can tick off a dozen more, all of which we are incurring, you and I are incurring because of these times. Those expenses are now all deductible. $20,000 to $50,000 is the range that our clients are realizing when they have asked us to construct this new tax-free fringe benefit for them. You can't just go out and open the tax code and use it. You have to have a plan in place that allows and fosters and suggests and indicates the deductions that you as a business owner intend to use.
Yeah, that's those are very interesting points and definitely things to consider. Um, and so, and our motto is, if you have a good tax preparer who you have a long-standing relationship with, and you don't want to leave, we support that. So if we have people that are watching this video, and maybe their accountant or CPA or EA or whomever hasn't brought any of this information to their attention, how can they approach their tax professional to start this conversation and make sure that even if they're not working with you or I, that they can still take advantage of all of these strategies?
That's the $64,000 question right there. The risk they pose in approaching their current advisor is to hear what they've always heard. Sam, we're doing everything we can to reduce your taxes. If there's anything more to do, we'd be doing. I've been doing this for 40 years, Sam. I got you covered. That's an indication that the CPA or the advisor, whatever title they have, has stopped working for their clients, because these are very different times. These are very different opportunities. They may not know about these things. What the best answer I can offer for you is to thank you for what you're doing, because you're spreading information out that is not readily available. People that are seeking this type of information can find it. They may not find it from their existing advisor. I hope they do. This information is available to you, to a CPA, as available as it is to me. I just made a business out of it. And so you and I have missionary work to do here. We have to bring this information to clients and their advisors.
Yes. So that being said, first of all, for anybody who watches this, I would strongly suggest that, I get it. People have personal ties and they're loyal to the professionals that have served them ongoing for a number of years, or maybe it's a friend of the family or whatever the case may be. But I would encourage everyone to bring this information. If you are loyal to your preparer, your tax professional, bring this information to them. And, like you said, if they respond with these pushbacks almost, or this, we've done what we can do, consider allowing Dave and his team to take a look at what you're doing, and see and give you kind of an idea. Because here's the thing, and I run into this a lot with the law firm owners that I work with, when they have staff that they are, whether it's a family member or a friend, and they kind of make these exceptions for these people because of who they are, that may not be in the best interest of the business. And so I encourage you to really weigh what it is to you. Your business, I always tell people, you have to look at your business as this thing that you really want to outlast you, right? If you have a purpose and a mission and you're building this thing, you want to exit it successfully and profitably, but help it to go forward. And in order to do that, you have to view your business as, it's almost like you're a scapegoat, right? Like, I need to do this because this is what's best for the business. No matter how I feel, my business needs to go on and succeed and be in the best possible financial and tax positioning that it can be. So, for those of you who do bring this information to your tax professional, and maybe they just need to do some research on it. Right now is tax season. Every tax professional is busy. Some people may have this on their list to give them the benefit of the doubt. But I really highly encourage you to at least have a conversation with us about this, if you're not finding solutions with your current tax professional.
These solutions exist. They are real. They are the law. And none of us can know all of the law. None of us can. It takes a team. It takes a constant curiosity to move through the evolving and changing laws that help us here. But we offer no-cost second opinion. We'll provide the advice that's needed about how much tax savings are possible. And then a client has the option to decide who they want to write a check to, the IRS or to a professional who can solve a problem and make it go away for the rest of their working lives. You've described very well, Chelsea. Business owners in the realm we work with need to behave like business owners of Fortune 500 companies. A Fortune 500 company business owner says, I have to protect my shareholders. They're an important stakeholder. I have to preserve my assets to keep fueling the business growth for my shareholders. Now, how many small and medium business owners conceptualize themselves as shareholders in that way? Very few. If they are not acting to reduce their biggest single personal expense, it's called taxes. They're not protecting assets for the shareholder. So that's another one of those mindsets that need to change. 40% of a person's expenses in their entire life, 40% of their income goes to taxes. 3% goes to savings. If you want to save more, control your taxes. It's a very simple equation. If you want to save more, invest more in your business.
I've heard that 40% before, and my first thought was, what do you mean 40%? That's not my effective tax rate. But just so that everyone understands where this 40% is coming from, right? Sales tax, use tax, fuel tax, food tax, all the taxes, not just end of year income tax.
It's brutal. We can control only what we can. I can't control sales tax if it is applied on the food I need to eat. But income taxes are like a football game plan. If you have a good coach, if you have a good plan, you can win at that game too.
Well said. And I think that's the perfect comment to leave this on. Dave, I really appreciate you giving us your time. I really hope that people, take this in and make sure that they find a professional that's willing to utilize the laws of the tax code for them. If people want to get in touch with you, what is the best way for them to do that?
The best way would probably be to visit our website. It has more information. It has lots of contact information. Taxlawsolutions with an S.net. Taxlawsolutions.net. You'll find us all there. Your listeners or watchers will find us all there, and they'll find access to us and all the resources we can bring to bear.
Awesome. And I will include that website in the footnotes as well. So thank you again. Thank you again for giving your time today and sharing this information. This is kind of our focus in what we do. We're here to share information, give it away, give you the tools that you need to succeed with or without us, but really just educating business owners on what their options are. So thanks again. I really appreciate it. And y'all, this was great. We will be back with another one.
Been a pleasure, Chelsea.